Hello. Today we're talking about a part of the property market that's really struggling right now, UK commercial property. I'm talking about retail shops, offices, warehouses, and workshops, the kind of properties that used to be seen as solid long-term passive investments. For years, people bought them for steady rental income and slow but reliable capital growth. But things have changed. Demand is falling, prices are dropping, returns are shrinking, and the risks are rising. Hi, everyone. I'm Dr. Tariq, or Dr. T, and I've been in the property business for almost 50 years. Here's a bit about me. In the 1980s, whilst working as a junior doctor, my hobby was computers, and I co-founded one of the UK's largest PC manufacturers with over 3,000 staff and brands such as Tiny, Opus, and Time Computers. Computer manufacturing moved to China by early 2000s, and during the past 17 years, I've researched and analysed the UK property market and developed a property business for 100% passive investors that is different to traditional agents and property companies. My children and over 100 staff now run this business, but I still help out with strategy, marketing, and client advice. We've appeared on the BBC's main property show over 7 times, bought, renovated, rented out, and resold almost 3,000 low-cost houses, and we continue to look after these for our investor clients. I'm now retired from my part-time NHS work, but I really enjoy helping people with property investment and making videos like this. Before we dive in, if you find today's information useful, please hit the like button. Drop a comment below letting me know what you'd like us to cover next. And make sure you subscribe and hit the bell so you don't miss future property tips. It really helps the channel and spreads the word. Let's get back to the video now. So let's look at why commercial property is no longer a good fit for most passive investors. Firstly, demand has dropped sharply. After COVID, the way people work has changed permanently. With hybrid and remote working now the norm, many businesses just don't need big office spaces anymore. And it's not just offices. High street retail is still under huge pressure from online shopping. Walk down most town centres and you'll see empty shops everywhere. Even warehouses, which boomed for a couple of years, are now starting to cool off because supply has finally caught up with demand. These are big shifts. If you haven't subscribed yet, now's a good time. We publish content every week on UK property investing. Hit the bell and like. It really helps the channel and ensures you're notified when the next video is released. Next, prices are falling. Offices, retail units, and industrial spaces have all seen big drops in value. Higher interest rates, lower demand, and rising costs have hit the sector hard. In many cases, properties are now worth less than the loans against them. That's negative equity territory. Lenders are trying to avoid forcing the owners to sell by using a tactic known as extend and pretend. Basically, they just extend the loan terms and pretend everything's fine, because if they forced a sale, they'd have to recognize the losses. But that only delays the problem, doesn't fix it. The third issue is lower returns. On paper, commercial rents might still look attractive, but in reality, once you factor in vacancies and falling rents, the true net yield is far lower than it seems. And finally, the risks are much higher than most people realize. Commercial leases are long, but when a tenant leaves or goes bust, it can take months or even years for a new one. Meanwhile, the landlord still has to pay business rates, insurance, and maintenance with no income coming in. So your investment can quickly turn into a liability. On the other hand, demand for residential property is still rising, and we're in the middle of a UK housing shortage. In fact, the government has even eased planning rules so developers can convert unused commercial buildings into flats. So if you're an active investor who wants to take on a project, converting offices or shops into residential could be profitable, especially in London and the South. But for passive investors, Commercial property is just too risky right now. If you want stability and long-term growth, stick to low-cost freehold houses in good rental areas. They're still the safest and most reliable form of property investment in the UK. So what do you think? Would you consider buying commercial property in today's market, maybe to convert it into residential? Or would you stick with the safer option, standard residential homes? Let me know your thoughts in the comments below. Thanks for watching, and please check out the message from our sponsor at the end.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself, and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.